Welcome to episode 11 of the Blue Screen Podcast, and I'm your host Abongile Papa. And today we're going to be talking about something that I really like. Just like I said in the last episode, man, I really wanted to take a different direction in terms of like the content. I wanted to give something that really helps traders out, And if you had been listening to the previous episode, you would know exactly what's happening with gold right now, and you would have been ahead of everyone else. Well, not everyone else, but ahead of the curve, you would have been. And today we're just going to be breaking it down because the numbers came out now, and the numbers changed from last time, which is the COT data. I like to look at COT data is kind of like my favorite part of the sentimental analysis is my favorite part of fundamental analysis altogether, which is just a subset of fundamental analysis, but it's my favorite one because I feel like things like geopolitical events, interest rates, stuff like that can be subjective, like very subjective, and I don't like that. I prefer to have like data, like I still do look at that, but I don't really put too much weight on it because something could come out right now that, for example, like ideally in a perfect trading world, this weekend when Iran, that was last weekend, right? Yeah, when Iran sent missiles to Israel, usually we would just see like a huge spike up in gold, but this didn't happen because the markets interpreted that in a different way, and I don't know why it hasn't gone up. I still think that's why I think that this has a higher probability of being a deep pullback than it being a sell-off. And I say that to say, man, we kind of like had this in the bag last week. We talked about this, why we thought that gold might sell off, and it was solely based on just COT data, which is commitment of traders, which is both sides. We look at retail sentiment and quote unquote smart money sentiment, which is your hedge funds, because they are legally obligated or like requested, if that's the word, to tell us where they are positioned in the market. And I mean, I already shared where I get this information, so I don't think there's a need to share it again. Or is it? Yeah, because they might be new people watching. So I get the retail sentiment from my FX book, and then I get the smart money side of it from Trading Register, which is something that I'm just going to put on the notes. And we have the retail sentiment gets updated every day, so that's easier to follow than, unlike the smart money. I still don't know like how often it gets updated. I just like look and see every day to see whether they update it or not. But I think it's like bi-weekly, which is 2 weeks. That's my hunch. But anyways, let's talk about it. Let's talk about what's going on. Because last time we spoke, retail sentiment was majority, which is more than 50% of them were selling the market. And time gold was making higher highs, which is weird because now gold has broken resistances and broken trend lines and all that type of stuff. I don't trade with none of that stuff. Well, some version of it, kinda, because you do have to have some version of support and resistance within your strategy, whether you use smart money or not. Smart money, whether you use indicators, whether you use anything, you kind of have to find high probability zones to enter at, which can be called resistance or support. So last time and this time, the updated version says that 59% of retail traders are shorting the market right now, which is which means that no, not shorting, my bad. 59% of traders are long gold right now, XAUUSD, and they go and they long right now when it's shorting, which is a trend that I've seen often happen even when gold was making all-time highs. We spoke about this in the last episode. Even when gold was making all-time highs, retail traders were like 60% short, like 60, nearly 70%. At some point it did reach 70%, but when it started, they were like a lot of them were like shorting the market. So when you see retail traders lean towards a certain direction, you want to stay away from that direction. And the smart money side of things from Trading Tuesday was updated, which was something that I was hoping would happen like very soon, sooner rather than later. They updated it on the 16th of April. So here are the numbers, and I would like to clarify, because I kind of explained producer merchants side of things in a wrong way, because producer merchants, okay, let me explain it like this, right? Because I was a bit excited, because this is a topic that actually excites me. So producer merchants, it's very naive for us traders to really think that only traders and hedge funds move the markets. There are people that don't care about this, the charts or the fundamental data or any of that for that matter. They just selling and buying gold. That's their job, which are producer merchants. And when gold is at a high demand, obviously they will be selling more gold, because it's at a high demand, so it's of profit for them to sell more gold. And when gold is making all-time lows, it's like those are discounted prices for them, so it makes sense for them to like buy more gold. So that's why you have that relationship with producer merchants, where when price is making all-time highs, they are selling, and when price is making all-time lows, they are buying, or any lows for that matter. So producer merchants, last time we spoke, was at 69.03%, and this week it's at 65.48%, which doesn't seem like much to like people, but the more like you look at this, the more you start to understand what's effective, you get me? So with this producer merchants being, and on top of that, they added 3,606 long contracts. So they added long contracts while it was selling. That means they are buying the markets. You get me? So which means on the charts that you're trading, it should like show you the inverse like thing, the opposite, which means price should be selling when they're doing this. And they subtracted 4,517 short contracts, which shows you that they are pulling out of their shorts, which means that demand for this product is kind of dying down. So you get me? And then let's move more to the exciting side, because producer merchants is like optional. You don't have to look at this. If you want to, you can, but for me, I like to look at both of them, because they kind of like tell a story. That's all the markets are, is like you try to figure out this complex puzzle, then at the end of the day you get rewarded for it. So let's talk about managed money right now, which is they were 84.15% long the markets last week, and these are the like market movers. So don't get like discouraged because you see like the different in percentages is like very short, because very like minute, very small. It's because it's not easy for them to like just get out of a position, you get me? And it's not just like it's one entity, it's like a lot of entities which have a lot of different opinions about gold right now. But for now, it seems like there's a 2%, 2-ish% subtraction in long contracts, which brings us to 82.85% in the current week that we're in, current time period that we're in. I'm still trying to figure out how often this thing gets published, how often, because it seems like there's no like specified time frame. As far as I've seen from using trading system, is that there's no specified time frame where they say like every week they update it. It seems like whenever they update it, they just update it. So smart money subtracted 4,707 long contracts. That means they pulled out long positions. That could be because they might be taking profit because it's all-time highs right now, so which makes sense. And then they added 2,289 short contracts, which this could be because managed money is not just like one entity, just like I said, right? It could be like some hedge funds trade long term, some hedge funds, majority of like managed money is long term. You get me? So that means they're not just gonna flip a switch on the day and then they all of a sudden shorting the market. Is not that simple. But which is why I think if this is a deep pullback, there's a high chance that we're going to have like a return. If this is not a deep pullback and this is just a change in how gold is being traded right now, which I think is very highly unlikely. I think this is mostly just a deep pullback because a small percentage of like managed money is like short-term trading. Traders, well, they are traders in a way, but they just like bigger, you know. So they must be like positioned on the short side because they see the opportunity to go longer. They are analyzing the like shorter term trade as opposed to like other hedge funds that are looking at like the overall like trend. If you understand what I'm saying, if you're a trader, you should understand what I'm saying right now. So that explains the 2,289 short contracts that were added into the markets. Then I think the minus 4,707 long contract is because they might be taking profits, and this data is kind of like you have to get used to it. It's like right now you might not know like what big and small is, because this is kind of like it's big but it's not as big. Like when you see like something like a 5% drop or like a 10% drop, that's when you should like get really concerned. 2% is usually like pullbacks. And on top of that, gold right now, as we talked about it last week, Iran threw missiles at Israel, which caused some geopolitical tension. So in those times, usually gold takes price higher when there's tension, but I don't know what's going on right now and why, according to like that type of thing. It could be the interest rates, it could be something else, but it seems like gold is going lower. But I think that's just a retracement for an even higher move, because there's way too much geopolitical tension for gold to like go too much lower. I think gold is just going to correct itself. Whether that correction takes like a week, a year, a month, we might not know. Whether it consolidates in like a rectangle fashion or it like consolidates like in a downwards moving man, I've not traded that style pure price action in so long. what's that pattern called? A descending channel. Yeah, a descending channel type of formation. So it might do like impulse correction, impulse, which is probably going to get done on the daily chart or the 4-hour chart. It's going to be more evident. So that's what's going on with gold right now. That's my take on what gold is doing right now. And I like these moments, man, because they kind of like show me that I'm on the right direction when it comes to fundamentals. Because last week we said that gold has a high probability, and like I highlight that high probability because I don't want anyone listening to this to think that I'm like this super wizard guy who just like knows what the market is going to do at all times, because no, I don't. Sometimes I do get it wrong, and that's okay. It's called trading. You come up with the theory and then you put money on that theory, and then you either win or you lose, and you do this over time. Then we call you a person that has an edge in the market, thus making profits in the market. So that's all for me for today, and I wish you all the blue screens, man, in the world. I hope you are very cautious in your approach to trading these times. These are very volatile times because we saw the VIX making highs. So be careful out there. It's a jungle out there. This is where either a lot of great traders are going to get made, or a lot of traders are going to get dropped off, meaning that they're not going to want to trade anymore. This is that time period where you either adapt or you die. So happy trading, man.